Everyone is feeling hopeless at the height of this inflation, and I completely understand that. What if you could still make money in spite of it? What if I told you that you could still achieve your goal of becoming a millionaire? I don't want to lie to you and say that $1 million could appear in your bank account overnight, like you won the lottery, because this doesn't actually occur. However, the truth is that if you make wise investment decisions, you can actually continue to earn money despite ongoing inflation. So what are these wise decisions? You'll learn soon enough. We'll be sharing this video with you today about how, by following Warren Buffett's advice, you can still make millions despite ongoing inflation. If you haven't seen the first part of this two-part video, feel free to do so after watching this one. Stay tuned and we'll learn about the best investments you can make in an inflationary economy. People are simply jumping into the wrong investment during inflation since they thought it is the smartest move to make given how everything seems low. However, we've told you which are the worst investments you should avoid making at the height of inflation in another video. Now here, we'll tell you which ones are the best investments you can make during inflation. This framework is referred to as the investor's protection against inflation pyramid. The rate of inflation is still high. The Consumer Price Index has increased by 8.3% since last year, according to the most recent data, which was released in early May. Practically speaking, higher gas and grocery costs might be pushing your budget to its absolute limit. The best ways to control inflation are a hot topic in the investing world. Investing in commodities, treasury-inflated protection securities, real estate, and commodities is a common investment strategy. Since they typically increase more quickly than inflation, stocks can also provide protection over a long period of time. The investments listed below are also the best to own in an inflationary economy. Businesses with high return on assets and low capital requirements. The chairman and CEO of Berkshire Hathaway, Warren Buffett, once stated that the best businesses during inflation are the ones that you buy once, and you don't have to keep making capital investments subsequently. You also need to avoid any business that requires a need to invest in heavy capital. He specifically mentions real estate as being good during inflation, which you may buy once and then also get the rise in value, while he calls out businesses like railroads and utilities as not. So here's an example. John, a classmate of Sandra's, writes a song and posts it on Spotify. He had to pay a DJ $1,000 to mix the sound for him, as well as rent the studio. He now receives $100 in royalties from Spotify annually. In other words, he is earning a 10% return, just like Sandra did when there is no inflation. So what will it mean for him if a 10% inflation happens? John makes $100 his first year, as was to be expected. Inflation then occurs. The benefit of John's business is that he doesn't need to provide additional funding for it to continue operating. Due to inflation, he will make a profit of $110 the following year, $121 the following year, and all of it will be free cash flow. He can take the money with him and use it elsewhere, or he could invest it to build up his music collection and write more songs. The three qualities listed under the mediocre type of productive assets can be completely reversed to produce the three qualities you are looking for in a company that will perform well during inflationary periods. The following is what you see. Businesses with well-known brands like Coke or just about any software provider where there are significant economies scaled. Although estimating pricing power is a challenging task, understanding competition, substitute, and customer power are helpful. Using Porter's 5 forces framework, you can analyze this. Little to no cash flow requirement and ideally some balance sheet leverage. You can make the case that if you run a business that required very little capital investment, had genuine price flexibility during an inflationary period, so that people would continue to forego a half hour of work each month to buy your product and leverage it, then you might even outperform inflation to some extent. Sadly, even this class of investment is not a sure thing, especially if everyone starts to believe it to be. Even for companies with high pricing power and little need for capital investment, you can overpay. Even though it's a good place to look, a good business is not always a good purchase. By the way, Buffett rarely discusses other productive assets like farmland and rental properties, but this likely falls somewhere in between these two categories. Although maintaining these assets in operation typically requires some capital, you can leverage them quite a bit. In his explanation of what happened to the debt during the German Weimar Republic in the 1920s, Charlie Munger says that if you own a home with a very large mortgage and there is incredible inflation that eliminates the mortgage, you will still have the home. In Germany's Weimar, you eventually receive your mortgage back. It was extremely fascinating. The only thing they did well was that, in essence, some of the mortgages were reinstated as payments to creditors. Always keep in mind that leverage has two sides. What then do we discover at the pyramid summit? Your skills. Investing in oneself and your skills is the best way to protect against inflation, according to Warren Buffett. So according to him, whether you're the best teacher, the best surgeon, the best lawyer, you will get a share of the national economic pie, no matter what the value of whatever the currency may be. Therefore, you don't need to continually update your knowledge if you're already the top brain surgeon, lawyer, or whatever else in your field. When you attended medical school or law school, you paid money for your expertise. You are not required to keep investing. Additionally, you keep your earning potential in today's money. The best way to prevent inflation is to invest in yourself and increase your value to others. By doing this, you will always be able to control a certain percentage of what other people produce in terms of goods and services, regardless of the value of their currency, be it dollars, rich marks, Bitcoin, or seashells. Additionally, since your debt will be reduced if you borrowed heavily to attend an Ivy League university, you will fare even better during inflationary times. So in other words, your best course of action may be to invest in yourself. Your skill set is a valuable asset that inflation can't replace, according to Buffett. Considering investing in yourself as one of your options when deciding how to use your money. A dividend with a higher earning potential can support future opportunities for compounding wealth. So the bottom line, your ability to earn money on your own is the best defense against inflation. You will always be given a certain percentage of other people's production of goods and services if you contribute something worthwhile to society. If you feel like you don't have enough skills that will get you to earn additional income, you can always add more to your portfolio through paid or free online courses. Invest in yourself and add more to your current knowledge. That way, there are more chances for employers to give you a raise, keep you in your job despite inflation, or easily get hired by another employer. Now this is the end of this two-part video about how to combat inflation by avoiding the worst investments and choosing the right investments. If you have other questions you want to ask, feel free to write them down in the comments section below. Again, don't forget to like, subscribe, and ring the notification bell to stay updated on our latest videos. This is your 3 Towers Investing channel. Thanks for watching and see you soon.